And about the US-China trade war, which is happening right now, the tariff war, which we also briefly discussed, इसके वजह से what do you think कि Indian जो like India है उनको क्या क्या opportunities है, and what can we export, or what are like some of the industries or products that you think will have a lot of advantage?
No, I think it's a bunch of industrials across a range of industries, boring sometimes, from chemicals to pharma to steel and other products. Although there are deep interlinkages. We may buy the input from China and then sell to America and so on and so forth. More broadly, the China plus one strategy, as a lot of people have been saying, has become more pronounced in last week or so because of the way this whole Trump announcement went. Initially on 180 countries, now only on one country, with the other countries doing negotiations over the next 2-3 months. Even when those tariffs were announced, India had a lower tariff number than a Vietnam or a China, because these numbers were basically announced on a bilateral trade surplus basis. It was just based on that bilateral trade deficit the US has with that country as a percentage of its overall trade with that country divided by 2. It was simply that formula. So even then, India was looking relatively better off. But now, with so much pressure on China, India may not be as better off compared to a Vietnam today, but compared to a China, it is. So now, if you're an Apple, you want to accelerate the relative shift of production out of China towards India, and in a bit towards Brazil, etc. Also, they are going, but India primarily, because you don't know what happens next in the trade war, and if these tariffs remain, although they have currently exempted electronics like smartphones for some time, but if it comes back, it becomes almost impossible to sell iPhones at the price the American audience and American public and consumers were used to, right? So because that threat is hanging on your head, even if it is 5-7% more expensive because of lack of economies of scale in India, let us say for the time being, although some of that is met with PLI, the production linked incentive subsidy or incentive that the Indian government gives, you want to shift towards India. And India is benefiting there because of these policies, but also because of Indian scale. Because if you want to sell to the Indian domestic audience, Indian domestic market, which may be relatively small today but growing rapidly, it helps that you manufacture or at least assemble in India. Because then whatever little tariffs India may have, India does not have 100% tariffs, etc. But whatever tariffs India has, you jump those tariffs. So if you can't export all of it in a down year, you can sell more in India. Or if you have a bumper year in India, you kind of sell more in India, export less, or vice versa. So India becomes a naturally attractive export hub for a company like Apple and others, because Vietnam may also be equally, if not slightly more efficient, but the Vietnam domestic market will never become as large as India's, right? So if you go to Vietnam, the way, for example, Samsung was all in into Vietnam at one point, of course, it has a massive plant in Greater Noida as well. But to export from Vietnam to India, you may have a few tariffs, despite the India-ASEAN FTA going forward, right? So all FTAs are basically up for renegotiation or exemptions or this or that clause.
FTAs are foreign trade agreements.
Foreign trade agreements. And now, I mean, you have India is right now negotiating a bilateral trade deal with America, which is just short an FTA. Same with EU. We've had similar deals with Australia and UAE in the recent past. So what India is doing was, India was looking east, ASEAN, Japan, South Korea, thought of joining RCEP, which is Regional Comprehensive Economic Partnership, where China is also there. At the last moment said no. Went through a protectionist phase, very moderate one, is now making that protectionism or that industrial policy a bit more sophisticated, and is wanting to sign trade deals towards its west. So Middle East, America, Europe, Australia, so that it is integrated to the global economy without getting overwhelmed with Chinese imports, which may come directly from China or via Vietnam, etc. Although there are transshipment clauses, minimum value add clauses, which is very difficult to enforce and calculate and measure all of that. You can have, as part of your India ASEAN FTA, ASEAN stands for Southeast Asia, that, if you import something from China and do only bare minimum value add, you cannot then export to India duty free. But how do you really measure that? You can't. Can you realistically track the entire supply chain? How it is backward integrated, what its vertical and horizontal linkages are? You can't. So beyond the point, India has realized that while we cannot definitely decouple from China also, because our pharma depends on their APIs, chemicals may depend on some input molecules, etc. It's just too large an economy to decouple from. On the margin, we want to make sure we slightly decouple. At the same time, we attract more investments from them, provided those investments are part of a JV, or where the Chinese is a minority partner, or where there is some tech transfer. So after Galwan and the geopolitical crisis, there was a short-term full freeze to the extent possible, although the trade deficit increased. Now India is trying to have a more sophisticated strategy that we're okay with your investments, but you come as a junior partner. You give us the technology. You make some money along the way, that's fine. But you are leading the world in renewable tech, in EVs, etc. So let's do business together. But you don't get to dominate the supply chain. And we will indigenize the supply chain slowly but surely. And it's an offer that the Chinese are not happy about it, but they don't have much alternative. The US market is trying to push them out. Again, they will also not fully succeed. They will end up having some deal. And India, again, a relatively small market today, but a huge market in 5-10 years, even more than 15 years, and so on and so forth. Just before the show, we were briefly discussing about the Maruti example, right? I mean,
Yeah.
Maruti came to India, 40-45 years ago. It's basically Suzuki owned, right? Japanese company. And now the business in which they just have a narrow majority stake, that business is Maruti Suzuki India, is worth significantly more than Suzuki Japan, the parent entity, which has a majority stake in this business. Right? So it shows that if you are able to invest in India for the long term, you can build huge businesses in India, despite being a foreign company. So do the Chinese really want to give up even minority stakes? If they become totally out, removed from the Indian industrial chains, they lose to some extent the next industrial revolution. So, what has happened now because of this partial reversal from globalization, especially in goods more than in services, is that scale has started to matter much more. Size has started to matter much more. In a world in which free trade was much more the norm, let's say the 1990s of the world or the early 2000s of the world, even a small economy like South Korea could export its way to the US primarily and do very well. Or city states like Singapore or Hong Kong could do very, very well. Now those city states are doing better as financial heavens more than as trade heavens. Or, or the South Korea has seen a natural limit without, I mean, of course, there are social effects. Their fertility rates are very low. If you work too hard, you eat your future seed corn. In the long term, your economic growth may not be sustainable, right? South Korea has the world's lowest birth rate, for example. So there are downstream effects of growing too rapidly if it's not scalable or sustainable for you. But India is one of the few economies, because India is the only country along with China which has a billion plus population. Both of us are around 1.4 billion each. Give you an idea, the US is like less than 350 million. So both India and China are more than 4 times the US population. And US is number 3 in population. And India is growing faster than China, and India is younger than China. Of course, education, etc., leaves a lot to be desired, but the younger generation is entirely literate, digitally literate, natively literate, etc. So, in that case, what happens is a snowball effect kicks in. So, for India, this world, while not necessarily ideal, where you defragment a bit or you have a lot of regional trade deals, not necessarily a global trading architecture. The WTO is, for all practical purposes, dead. Right? I mean, we can use it to sue each other for legalistic purposes and put an excuse to put an anti-dumping duty on China for this or that sector. But WTO as a universal global trading architecture is now dead. So this world where your size and your scale matters much more suits India much more. So far, sometimes scale was a disadvantage. Like you could be administratively inefficient. Everything was too centralized, perhaps. Things were not necessarily as nimble as you want to. But this world suits scale, and this world, the fact that we have the world's largest polity now, because we've overtaken the Chinese in population just about. We were always the world's largest democracy. Now we are the world's largest polity, whether democracy or dictatorship, is something which is very, very powerful. So despite the fact that India is not even exactly $3,000 per capita income, and market exchange rates, the US is almost $90,000, and China is what, 12, $13,000. US India is already number 5 GDP in market exchange rate terms, soon to be number 3 in 1 or 2 years. In PPP or purchasing power parity terms, which is cost of living adjusted, we are already number 3 for a long time. So in this fragmenting trade world, having scale and size the way India does allows us to renegotiate those China plus one terms much better, which is your original question, right? So Vietnam may in the short term be much more efficient, perhaps in some areas, but that's not the only thing an American corporation will look at. They'll also look at, okay, but if you do it in India, then you also have the optionality of selling in the Indian market. If not today, definitely in 5 years. And I think in percentage terms, the iPhone sold in India is probably one of the highest CAGRs for China. It's for Apple. It's still a relatively small part of overall Apple sales because, of course, an iPhone tends to be an expensive product compared to an entry level smartphone. But the small base, notwithstanding, is growing very rapidly. So, of course, people at Apple are not stupid. People at other companies are not stupid. They can do the math. And they're saying, do we want it? It helps that we can also build here and export from here, which is also why just to the last point before we go to the next question is, for example, we don't have world beating scale in four-wheelers. In some auto ancillaries, we are getting there. In two-wheelers, we do. Four-wheelers make left, right wheel drive bhi tha. Two-wheelers, by definition, there's no left wheel or right wheel. And because of that scale, we are predominant or we are dominating exporting two-wheelers, for example, to the global south, in some African countries, some Latin American countries, etc. Because what happens is when you have a large share of a particular market, your bad year creates enough vacancy or inventory to export that elsewhere. If you're creating, let's say, 20 million vehicles and you this year just have a demand for 15 million, you're not going to close the factory for 5 million overnight, right? You will first try to export it. But when your domestic demand or supply is only 2 million, you can't export 5 million. So just the sine curve and cost curve of a large production base, a large demand base, in and of itself allows you to export much more. This is what happened with China in four-wheelers. Because China went to 30 million four-wheeler demand, they suddenly out of nowhere became a huge exporter of four-wheelers, along with the fact that they're leading the EV revolution. Russia came under US sanctions, Europe sanctions, so they got the Russia market, etc. So this scale begets more scale. And in this fragmenting world, if the US and China are fighting, the next biggest entity is India and the European Union, if you count that as one country, but lower population, but of course richer on per capita terms. So these are the only four entities with scale, especially from a 2030 point of view. Everything else has to become, in one way or the other, a satellite of these four.
If you learned something new from this video, do share it with your friends and subscribe to this channel so that we can bring you the best content possible. Also, if you want to watch this entire episode, click on the link in the description box and you can go to Kushal Lodha YouTube channel and watch the entire podcast episode. Thank you so much for watching this and have an amazing day.